I'm ready for gold to drop $500 in 2 days because of some huge dollar crisis precipitated by some major oil war where there's no more diesel in the country and then all supply lines break down and there's no food at the supermarkets and there's, runs to the ATM or what. I don't know what's going to happen. I'm ready for that. I'm ready for gold to go to 3,000 if it is. I'm not saying it's going to go there. I don't
Hmm.
think it is. If you can ask me what do I actually think, I think we're near the bottom. But I mean, I've thought things before and I've been wrong. so I'm prepared for it to be the bottom. I'm prepared for it not to be the bottom.
The global financial system is currently navigating incredibly turbulent waters, leaving investors to wonder how severe the upcoming market correction will actually be. Precious metals are acting as a core focal point during this era of massive global macroeconomic stress, soaring inflationary pressures, and unprecedented fiat debt accumulation. Rafi Farber, a seasoned financial analyst and precious metals commentator, maps out a highly volatile trajectory for the current economic landscape while analyzing deep structural risks. He asserts that the current market layout strongly mirrors the inflationary and geopolitical crisis of 1973, highlighting that a major oil war or a sudden, catastrophic supply chain breakdown could quickly precipitate a massive dollar crisis worldwide. Farber anticipates that if escalating global tensions choke off critical energy routes like the Straits of Hormuz, gold prices could see an extreme short-term plunge of $500 in a brief 2-day panic as liquidity dries up, or, conversely, skyrocket straight to the $3,000 level as a safe haven asset. He cautions that investors must be fundamentally prepared for both extreme tail risk scenarios rather than placing blind bets on a single outcome, as the massive buildup of global derivatives makes the entire system highly unpredictable. Now, we present the clips from Rafi Farber's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
My style in playing these markets is not like I'm going to decide what I think and then I'm going to place a bet on it.
Right.
Well, the way I do it, the way I play these things, and the way that I stay alive to the end game, and the way that I plan to continue to stay alive through and get through to the end game when the dollar no longer works at all, is that I'm going to be ready for for any scenario, right? I'm ready for gold to drop $500 in 2 days because of some huge dollar crisis precipitated by some major oil war where there's no more diesel in the country and then all supply lines break down and there's no food at the supermarkets and there's, runs to the ATM or what. I don't know what's going to happen. I'm ready for that. I'm ready for gold to go to 3,000 if it is. I'm not saying it's going to go there. I don't think
Hmm.
it is. If you can ask me what do I actually think, I think we're near the bottom. But I mean, I've thought things before and I've been wrong. so I'm prepared for it to be the bottom. I'm prepared for it not to be the bottom.
Yeah.
I would prefer for it to be the bottom, and that's what I think. But in terms of what I'm doing, I have enough cash that I'm ready for it to drop more so I can buy more. And I have enough gold that if it really skyrockets $500 tomorrow because there's a huge war and then and there's a whole dump of the dollar, I don't know what's going to happen. I'm ready for that too, and I'm okay with that. Either way, I'll be fine. Well, debt always goes up, and gold doesn't always go up, but it always trends up. So it's not a one-to-one correlation. The more debt, the higher gold is. Although, big strokes, broad strokes, that's true. But it doesn't go like, the higher debt goes, the higher gold goes one for one. So yeah, we're in a correction, but there's always corrections. There's corrections in the biggest bull markets. From what I've seen, I put two videos out about this on my channel how this correction is looking very much like 1973, not just in terms of the shape of the curve, the shape of the graph, which I can show is pretty similar, but also the geopolitical. I don't know why. What is that word geopolitical? Just say political. Like I get geo, but anyway. So let's just use the big word geopolitical situation. The bottom in 1973 after the correction, it took about 6 months. All right, and
Hmm.
the bottom occurred in November 1973, right around the Yom Kippur War, which
Okay.
was a big oil war, around OPEC and Israel, and in America was airlifting weapons to Israel to ward off the Egyptian invasion, the Syrian invasion. We won that war, but not without serious casualties. But it's the same thing now. Well, Israel's involved in a war. America's involved in the same war. It's not exactly the same, but it's an oil war. And back then there was an OPEC embargo or the oil
Hmm.
embargo, and that was the first time that gasoline prices broke through $1. And now there's the choking off of the Straits of Hormuz. Everything's very similar.
Right.
Right. And to say that, the Yom Kippur War broke out October 6th, 1973, ended October 24th, I think. And then the gold bottom was like 3 weeks later. During the time when central banks had just announced their intention to, for the first time, sell gold at market prices, which they were not allowed to do until November 1973. They decided they were going to do it, and immediately when they said they're going to flood the market with a bunch of gold, gold skyrocketed 100%. So does
Interesting.
any of that make any sense?
No.
No, not according to any of the theories that I'm not saying the theories that we have are false. I'm saying that just because the theory theoretically is true and it's logical, it doesn't mean it's going to play out immediately. There's always some kind of lag. There's always more immediate circumstances that require someone to buy or sell this or that that affects price, but eventually we're right because gold always goes up with debt in the end. So that's what's going to happen now. I don't know exactly what's going to happen until then, but I've seen this before. I know what happens. I know what money is. I know what derivatives are. I'm going to pick with the money. That's all.
The historical similarities to the Yom Kippur War era suggest that major volatile corrections are entirely normal occurrences even within a broader, long-term secular bull market. A sudden, severe shock in the global energy sectors could easily cause the world to rapidly run out of accessible strategic oil reserves, catapulting crude prices to $150 or even $200 a barrel in a matter of weeks. This massive inflationary surge would inevitably bleed directly into the sovereign bond markets, causing bond prices to crash and forcing central banks like the Federal Reserve to print vast, unprecedented amounts of currency to artificially suppress rising interest rates. Such aggressive and desperate monetary expansion could ultimately mark the definitive end of the traditional fiat financial system as we know it, destroying purchasing power and forcing a rapid, chaotic global migration toward hard tangible assets like physical gold and silver to preserve generational wealth. Now, let's get back to the interview.
Russia has very, very low debt, and the U.S. has very, very high debt.
Right.
So
Right.
Russia already collapsed and reset. That was the collapse of the Soviet Union. So they get a clean slate after that, and they can start their whole project again, whatever that's going to be. So, how much longer do I think this is going to go on? Until something breaks in the oil market and we run out of the world runs out of oil reserves and the price of oil just catapults to 150 or $200 a barrel, and and then that bleeds into the bond market, and the bond market starts to fall, and then to push interest rates back down when the bond market's falling, the Fed has to print a bunch of money, and that should be the end of the financial system as we know it, and then we'll move to gold and silver. So it's just a matter of when oil dries up, and I don't know how much we have left. But I mean, if you're to ask me what I think is going on, I don't know what's going on. I don't have a geopolitical mind, but I mean, I see. I mean, like, not. I don't want to get too biblical or anything,
Mm.
or end of days, but you have all the players of the Bible going at each other now,
Right.
and in the land of the Old Testament. So I don't know what's going on. I don't know what's going to happen, but this to me seems bigger than just oil and finances. It seems to be a global thing, and it seems that Russia and Ukraine are just two more chess pieces in the same war because you know, here we talk about okay, so we have Hezbollah, Lebanon to the north, and we're always fighting with them. But who funds them? It's Iran. But the
Right.
question is, who funds Iran? It's really Russia. They're the ones with the biggest power in the region. So they're really the ones that are behind it all. And
Wow.
we're not gonna go up against Russia. It's like head to head. That's not feasible.
Right.
So that's America who does that, and they don't need Israel to encourage them to go after Russia. That's just what all the neocons do anyway.
Right. Right.
I don't know why, but everything seems like a huge chess game that seems extremely unstable, and something's going to blow up pretty soon. I mean, I'm pretty nervous about it. Everything that's exists the day before the dollar collapses, exists the day after the dollar collapses.
Right.
There's just the means of transporting the means of greasing those lines to make the move. It's not that that doesn't even exist either. It just shifts. It used to be the dollar, and now it's gold and silver. So what happens is that, okay, the truck driver doesn't want to drive anymore, so because he needs to be paid. So what's he going to be paid in? He'll have to be paid in something, and the most liquid something is gold and silver. Maybe initially he'll be paid in something else. Maybe copper. Maybe a free diesel tank or something.
Right.
It doesn't matter what it is, but the most liquid is going to be gold and silver. And once the gold and silver start to filter through that supply chain, it might change form. It might break up a little bit. It'll definitely break up. It's not going to be as centralized, but the quicker you can get the liquidity through that system, the faster those supply chains will restart. And they're not going to completely disappear. They're not going to implode. They're just going to break up, and and liquidity will re-energize different parts of it, and then capitalists will have to go and chop them up and figure out how to redistribute them, and that's going to be tricky. I mean, that's the reason why we want a few months of food and water in our houses, so that when this is as the capitalist, which is going to be the gold and silver people, because we're going to have the capital. That's what a capitalist is. As it takes us time to figure out what the prices are of everything and how much things are worth in gold and silver terms, because the dollar doesn't mean anything, it's going to take a few months. And in the meantime, you can just sit back and have your emergency supplies. So hopefully it won't take more than a year. I mean, I don't know exactly how much food I have. I don't think I have a year's worth. I have a few months.
Right.
And I live in the boondocks, where I can theoretically I could just go to the backyard and pick some edible weeds. I know which ones they are, and there's rivers in my backyard and stuff. I don't think it's gonna get to that. I hope it won't. But that's why I'm here.
When a fiat currency finally faces systemic collapse and hyperinflationary rejection, the physical assets, real estate, and foundational infrastructure of the world do not simply vanish from existence overnight. Instead, the primary mechanism for transporting goods, managing logistics, and greasing the lines of daily commerce completely shifts away from failing paper currency toward tangible, undevaluable money. Truck drivers, local agricultural suppliers, and industrial producers will flatly refuse worthless paper notes or frozen digital bank balances, demanding immediate payment in highly liquid physical assets, making gold and silver the dominant forms of alternative media for survival. Properly preparing for this friction-filled transition period requires keeping at least a few months of emergency food, water, and essential medical supplies securely at home, allowing local neighborhood marketplaces the necessary time to calculate the true value of basic goods in precious metals. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.